Hi and welcome back. So if we're going to create a good return now, if you're going to complete your financial freedom figure, you know what your expenses are, you might have done those cuts that you need to do to get that number as low as possible, but now we want to get that return. I used in the last video, I used an example of 10% return. Now, how do you get 10% return? I mean, for a lot of experienced investors, 10% feels like a very obvious, easy number to get to. For those who aren't experienced investors, that can be really, really hard. And now, of course, everyone wants to get more. So what I'm going to do in this video is show you some different types of investments that you can do, discuss a little bit about the risks that are involved in the different ones, how they work, and also show you an investment that I think is very, very safe and secure and that a lot of people that I know are using to get a stable return and move towards their financial freedom figure. So I hope you're looking forward to this video. In the next video, I'm going to show you how you can use property investing to get a nice stable return that is safe, secured, and gives a high impact. So let's jump right into it. So what can you invest in? Well, you could invest in a savings account. So if you find a bank that has savings accounts, usually the return is between 0 and 3%. So that will not be very high. It'll take a while to get to your financial freedom figure and it won't help you get a lot of income. So this is where I started. Before I learned about investing, I found a savings account with 2% return. I put money in and that's what I had. Now I realized to reach my financial freedom figure got huge, right? It became 50 times my annual expenses, which meant I knew I would never be able to make that in a lifetime. So I had to start looking at different ways, and I found all these different types of investments. I could invest in an index fund. So if you haven't heard the term index fund, that basically means you're investing in the stock market. But instead of using a managed fund where you have a fund manager, you use an index fund, which basically takes the average of the stock market over time. What's great about it is that 96% of all managed funds fail to beat the index. And what's great is the index takes almost no fees, meaning you get to keep your whole return. The average over the past few hundred years or about 100 years is between 8 to 10% per year, depending on what country you're investing in. Obviously, none of these numbers I'm showing you now are guarantees that they'll keep this return, but it gives you an overview. Now, the one downside to an index fund is the fact that you have to sell off shares from that index fund to pay your bills. You don't actually have an asset that continues. Another one would be a mutual fund, and that is a fund, but it's traded by an individual. Now, 96% of all traded funds produce less result than the index because they take higher fees and it's just very hard to beat the average. So they could get usually between 0 and 8%, but there are those who actually beat it occasionally and would have a higher return. But if you're going to invest in funds, my general recommendation is an index fund. If you otherwise want to learn how to invest yourself, you invest in the stock market, you can. You should be averaging about 8 to 12% if you do your choices well. What's important is that you really learn stocks. So you get someone to teach you and help you with that part. And the other problem with stocks is they don't pay that much of a dividend. They don't pay out much cash flow, meaning you'll have to keep selling stock to pay your bills, meaning your portfolio is actually going to be shrinking for every year, which kind of defeats part of the purpose. So other ways you can save in bonds, and it's either corporate bonds or government bonds. The returns are pretty stable, but usually a little lower. You can invest in commodities, for example, in gold. The problem there, again, you have to sell the gold to live off of it, so your gold store will go down more and more. And then you have what's been very trendy lately, cryptocurrency, that can have explosive returns, thousands of percent, but also has a very, very high risk of losing everything. So that's one of those more volatile investments that I could say you could use to help you build your capital, but it shouldn't then be the base of your financial freedom figure. Finally, there's real estate. There you should be getting at least 10% in a direct return. You can get between 20 and 30 if you add in the value increase as in stocks. The difference with real estate is you're actually getting cash flow. And like I said, in the next video, I'm going to show you how to get these type of returns. Finally, there's lending, and I want to show you a type of lending you can do that gives a stable and safe between 6 and 8% return. So we've actually become partners. Momentum Property Education is actually partner in a crowdfunding platform. What this means is you can invest from as little as 100 euros into a property investment. It is a developer will borrow the money to go and build and do a property project, and they'll pay you 8% per annum, usually paid out monthly, but it will be different in different loans. What's great is it's secured against the property, meaning if something goes wrong, you have a first security. And this is something that's different between Max Crowdfund and most crowdfunding platforms, is that they have the first security, meaning if something goes wrong, the crowdfund will take over the property, sell the property, and pay you back your money. And because they don't lend more than 75–80% of the value of the property, when they sell the property, you'll be able to get your money back and be able to, continue to move or get your money back and put it into another investment. So it takes away a lot of the risk that I've seen in other crowd funds. So it's a very safe and stable one. So if that's something you'd like to explore, how to get 8% kind of guaranteed returns, you can take, because one thing that's exciting to me is you've now learned from yesterday when you did your financial setup, you worked on it to get a positive cash flow, right? Every month you make a profit. Now, if you start investing that profit, for example, into a fixed return like this, that will start to compound and grow, and that's where your future can really, really go quickly. So if you want, go to propertyeducation.com/crowdfund. You got a link below to check it out. And in the next video, I'm going to say if you don't want to invest with someone else and give them the money, I'm going to show you how you can build your own property portfolio, how a property investment will go. So thank you so much for joining us, and I'll see you in the next video.